What's up, everyone? It's Scotty with MoneyVest. So let's talk a little bit about Enphase energy stock and more specifically solar companies because they are getting smacked right now pre-market, dropping quite aggressively. Enphase is down over 13%. We got SolarEdge down a little bit over 30% at the moment, and that Invesco Solar ETF TAN is down over 8% at the moment. Sunrun, we're going to take a look at all of them, so don't you worry. Sunrun's down a little bit over 8% as well. So there's a lot of companies in this renewable energy space that are selling off quite aggressively. So we're going to break everything down in this video. It's kind of funny that I was done recording my market update video last night, pretty much yesterday. And as soon as I get done recording, as soon as I put my microphone down, SolarEdge comes out with their catalyst, it takes down Enphase with it. And the entire analysis that I did on Enphase during that market update is no longer helpful. But in this video, I'm going to break everything down. As always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. And again, links to our Discord and Patreon is going to be down below. We'd love to have you on board. There is a 16% annual discount that's available till the end of this month. And again, you get access to all these stock reports, you get access to all the members-only private videos, get access to everything that's going to be included with the link down below. So first things first, let's take a look at what actually happened. So solar stocks tumbled to a 3-year low as SolarEdge drops 25% on demand warning. So this is what they released yesterday, October 19, 2023. SolarEdge announces preliminary financial results. Will announce the entire financial results on Wednesday, November 1st, but they pretty much suggested that the demand is coming in significantly lower, more specifically in Europe, right? Not in North America, but in Europe is what they are seeing demand slowing down. So they mentioned, and I quote, during the second part of the third quarter 2023, we experienced substantial unexpected cancellations and push-outs of existing backlog from our European distributors, and we attribute these cancellations and pushouts to higher than expected inventory in the channels and slower than expected installation rates. In particular, installation rates for the third quarter were much slower at the end of the summer and in September, where traditionally there is a rise in installation rates. So that's what we are dealing with here. As a result, third quarter revenue, gross margins, and operating income will be below the low end of the prior guidance range, right? So not only on the lower end of that range, but below the lower end of that guidance range. And additionally, the company anticipates significantly lower revenues in the fourth quarter for 2023 as the inventory destocking process continues. And that is not what investors want to hear, right? I mean, saying things like they anticipate significantly lower revenues in the fourth quarter, revenue, gross margins, operating income coming in below the lower end of the guidance, basically using words like cancellations and, coming in with lower than expected installation rates. I mean, the stock sold off pretty aggressively on this very news, right? So SEDG, pre-market right now, it's down over 30% now. Aggressively selling off. Now, I do think that this is a very much of an overreaction from Wall Street as well, because Wall Street, as we know, tends to be very, very short-term focused. And I'll get to that in just a minute, because a lot of these companies that we're talking about, right, solar renewable energy companies, the thesis is not a few weeks or a few quarters or a few months, right? The thesis really is long-term. We're talking years as this transition towards solar and renewable energy happens over the course of several years. So in the third quarter revenue, they're now expecting it to be in the range of $720 to $730 million. And that's significantly lower than the prior guidance of $880 and $920 million. And GAAP gross margin is now expected to be within range of 19 to 20%. And non-GAAP gross margin now expected to be around 20.1 and 21.1% compared to 28 to 31%. So they are certainly getting affected both on the revenue side, on the margin side, and operating loss is now expected within range of $9 to $28 million. And non-GAAP operating income now expected between 12 and 31 million compared to the previous expectations of 115 to 135 million. Like, that's a dramatic move to the downside. I mean, it's crazy. 115 down to 12 million. That's over a 80% decline in operating income on a non-GAAP basis. So, SolarEdge obviously selling off over 30%, all on the back of this lower demand, lower margins, and lower guidance from the company. Now, a lot of it is macro driven, as we know. So these right here are the numbers if anybody wants to take a look. But Goldman Sachs downgraded SolarEdge to neutral from buy on Friday, and the firm said that the weak demand environment in Europe poses questions for the company heading into 2024 and is a much larger issue than just seasonality. And after a second straight disappointing quarter of results and guidance, we find it hard to defend the stock. We underestimated the effects of the combination of ongoing inventory and market demand, and now margin issues that are likely to serve as headwinds for the stock for the foreseeable future, given what appears to be a significant deterioration in visibility as well. And a lot of people, of course, investors are anticipating that Enphase is going to go through something very similar, and as a result, they're already knocking it down further to $100, down over 13% pre-market before the earnings even come out, because that's really how the markets work. SolarEdge coming out with their numbers, guiding us lower significantly and posting really, really bad numbers, unfortunately, is knocking down Enphase as well prior to the numbers are even out, because they're expecting the numbers are going to be very similar, and Enphase is going to go through another quarter of margin compression, poor guidance, or maybe even slowing growth on a year-over-year basis. Now, as I said earlier, I think it's important for us to understand the game that we're playing, right? Wall Street plays a very short-term game, all right? They only want to hold on to stocks that are going to have the potential to beat the market over the next 1 year, right? That's why we have price targets for the next 12 months. That's why we have always this constant argument, or this indicator of whether you've beaten the market or not, right? That's a big difference between institutional and retail. Institutional is positioned for the short term, retail is positioned for the long term. And that's why we kind of go through these ebbs and flows, where if the earnings are missed, if the revenues are missed, I mean, think about Tesla, right? From yesterday's sell-off over 10%. Is Tesla's thesis dead for the next 10 years? No. Is Enphase's thesis dead for the next 10 years from a long-term perspective? No. It's just from a short-term perspective, from a macro angle, given how high rates are, and it's becoming increasingly more difficult for people to finance solar panels, finance microinverters, finance electric vehicles, that we are going through a time period where demand is going to pull back, right? It's just how things work. If interest rates are higher, the cost of borrowing is higher, people are going to pull back on demand, right? The focus is very much going to be on necessities. And right now, things like electric vehicles and solar panels, even though there is an energy transition that's happening in the background, this is still not a necessity. This is a discretionary spend for most people, right? Installing $20,000 worth of solar panels, it's not something that everyone can do, given how high rates are when most people are financing this purchase. Same goes true with electric vehicles. So the macro environment has a very, very big role to play when it comes to companies like Tesla, when it comes to companies like Enphase, even NVIDIA, AMD to some extent. And I mentioned this specifically in our yesterday's update in our Discord, that higher interest rates are going to indeed affect companies that haven't been around in this for a long time. Like, in other words, Enphase, Tesla have never experienced interest rates as high as they are, because we're seeing rates as high as they are in over 16 years, right? The 10-year yield hasn't hit over 5% in 16 years since 2007. And Tesla and Enphase have not really experienced that level of economic tightening in their lifetime, right? So it's going to be a new environment. It's going to be a new reality for these companies to set in. Now, but I still want to go over, what the long-term thesis looks like. So electric bills are expensive. And if you take a look at the national average price of electricity in June 2023, this was 17 cents per kilowatt hour. And after the 30% federal solar tax credits available nationwide, the average price of electricity produced by solar systems purchased through solar.com between typically around 8 cents per kilowatt hour. So this right here is where we are at the moment for the electricity costs in 2023. It ranges anywhere between 9 cents to as much as 30 cents per kilowatt hour. California, Alaska, New York, Connecticut, some of the Northeast, sort of the East Coast and the West Coast, more specifically California, being some of the more expensive states when it comes to the electricity grid, and that's where a lot of the market's going to tap in eventually, right? Once interest rates start to roll over, we're going to see some more potential demand come back in for solar panels and microinverters. This is grid versus solar electricity cost over a span of 20 years, and what you'll notice is that the break-even point is around 10 years, because once you finance, the only cost really with respect to solar panels and microinverters is the financing cost. Everything else is generated by the sun, right? That's why you're collecting all that energy, you're storing all that energy, and you're using all that energy. With the grid electricity, you're paying every single month, and this is a, kind of like a decent analysis. Of course, depends on a case by case basis, but over a 20-year span, you'd be spending a little bit over $41,000 for grid electricity versus just under $21,000 over a 20-year span for solar systems and microinverters. Now, this number can change, and this number will change depending on financing, right? Again, if interest rates are higher, it starts to become less attractive to finance a solar system and microinverter, and it makes more sense to just simply stick with the grid. But like I said, it's a very macro-driven company, right? Very macro-driven demand, because at the end of the day, it's still discretionary. It's not really something that people right now consider to be as necessities. But if there are more tax subsidies, if there's more, tax credits on solar, then there's possibility that people are more inclined towards buying solar panels versus using electricity from their grid. And there's other factors that could improve these savings over a lifespan of solar panels, and that is that most solar equipment is warranted for 25 years and lasts much longer than that. Solar panels increase your home's value, and grid electricity also increase over time. The rates also increase over time as well. And BNB Paribas also, cutting the price target down to $131. There's been a lot of price cuts on Enphase, and they've now got an average rating of outperform and a price target ranging from $84 to $248 from analysts polled by Capital IQ. So that's where we are for Enphase, for a lot of different companies, and this is the technical analysis that we were looking at, and right now pre-market Enphase is sub $100, trading at $99.89. So this is a level that we haven't quite seen for Enphase since October of 2020. So it's hitting a 3-year low, but we've got a support at $92. So that's right here is going to be that next support level to watch for Enphase Energy. And considering where we are with this stock right now, so if you go over to Seeking Alpha, and if we figure out, let's just do like $5. $5 is really the earnings expectations or forecast for this year. So if you come over to earnings expectations here on an annual basis, $5 is that EPS, right? Let's just say that they cut their guidance by 25%, right? Let's just say that they're sitting at $4. At $99, right, divided by 4, we're looking at 24.5 times earnings multiple. At 5, we're looking at under 20. At 450, we're looking at 22. So Enphase right now on a 2023 basis is sitting at anywhere between 19 and 25 times earnings multiple, which to me seems to be like quite reasonable, right? From an earnings multiple standpoint, considering that the earnings are still going to grow at over 20% for the company. And if you take a look at the future forecast beyond 2023, 2024, 629, all the way up to 795 to as much as 954. So on 2024 basis, 99 divided by 6, 30, we're looking at a P multiple of 15.7 for Enphase Energy. So, it's really going to come down to how we're positioned. Institutions positioned for the short term. Like I said, if the company is not going to do well, they are going to get sold off. Similar to what we have witnessed with Tesla, similar to what we have witnessed for Meta, similar to what we have witnessed for so many different companies that have gone through this cycle where if it doesn't fit the narrative for Wall Street, they are going to get rid of it and going to include something that is going to perform better over the next 6 months, 12 months. But it all comes down to, having that time horizon of whether it's short term or long term. Yes, short term, there's a lot of headwinds for Tesla and Enphase, but then we have to ask ourselves, right, are we investing in this company long term, or is this mostly a trade for the short term? So hope you guys enjoyed this video. I'm going to watch $92 as a very strong support, and right now we're breaking down below this green support, green rectangle since 3-year low for Enphase, and a lot of other companies, of course, in the solar sector selling off quite aggressively. So we'll see what happens intraday. Do we get bought up or do we sell off even further? But again, if you want to join our Discord and our Patreon, links going to be down below. We'd love to have you on board. And as always, happy investing. I'll see you all in the next video.